Hi, friends. It is Marissa Miller. I am a local real estate agent here in Appleton, Wisconsin. And today I wanted to talk to you about 9 ways you can reduce your monthly mortgage payment. So we are hopping in right away to number one. I almost don't want to put this on here because it's so obvious, but more money down. Obviously, the more money you put down, the less your loan amount is and the less your payment will be. And if you put 20% down, then you can eliminate mortgage insurance. So on a $200,000 home with a 7% interest rate, if you put 5% down, your principal and interest will be $1,264. If you put 20% down, your principal and interest will be $1,064. So saving you $200 just by putting, well, not just, but by putting 15% more down, you're going to save $200 a month and lots of money over the life of the loan. Alrighty, now we have gift money. So gift money has always been around, but it is becoming more and more popular. So this is money that you get from your parents or your significant other, maybe a friend, family member. You can use this for closing costs, so you can use it for your down payment or buying down the rate. You can even use it for earnest money. Okay, number 3 is a seller credit. This is one of my most favorite ways of lowering your monthly payment or getting a little bit more money for closing. So you are asking for money from the seller out of their proceeds. You're going to get this money at closing and you can use it for rate buy downs, down payment, renovations, etc. So instead of offering $200,000 on a home listed for $210,000, and if this home has been sitting for a while and you're like, okay, I think the price is too high, and I don't want to offer full price. So you could offer $210,000 and ask for a $10,000 seller credit instead of just going down and offering $200,000. The seller will net essentially the same thing as if you had offered $200,000 or if you do $210,000 and a $10,000 seller credit. However, you will be getting a lot more money at closing, and you can use it for your down payment, closing costs, all of those things that I just mentioned above. So really love this method and little hack, and this is definitely becoming more popular right now as well. Number 4 are down payment assistance programs. So there are various programs for down payment assistance, and you can just look up Down Payment Assistance Wisconsin or Down Payment Assistance Appleton, or if you're in a different area, try looking that up. Housing and Urban Development, also known as HUD, is going to have a lot of these programs. Specifically in Appleton, we have the Housing Authority, so you can look on their website and see if you qualify for any assistance or grants. Number 5 is my second favorite hack, falling probably pretty close in line to the seller credit, but looking in areas with lower taxes. Pay close attention to the taxes when you're looking at different properties. Some areas, specifically in the valley, are known for having lower taxes than other areas. And then if you know what a good range is for you in your budget, so let's say that $2,500 to $3,000 annual taxes seems to be coming out to a monthly payment that is doable for you, then try to stay within that range. If you see something come up that has $4,000 in annual taxes, that is going to affect your monthly payment for sure. So I have an example down here at the bottom in bold, a home with $3,500 annual taxes and a home with $2,700 annual taxes will have a $67 difference in monthly payment. So it might not seem like much, but it could make a difference in your monthly payment. So keep taxes in mind. Number 6, looking under your budget and being flexible. This is super important, especially in times of low inventory. So be flexible and open. Make a needs versus wants list and be prepared to adjust that needs versus wants list. Max and I started out looking and we wanted a 2-car garage and we did not want to have stairs in our house. We ended up in a house that does not have a 2-car garage, and we do have stairs in our house. So just being open and flexible with your options and really just trusting. This is where you kind of have to trust your heart sometimes. It has to be a good mix of logic and emotion when you're house hunting. So one other thing is to look well under your budget. So if your budget is $250,000 and you're looking at a house that is listed for $249,900, you will not have as much flexibility to be competitive with those whose budget is $275,000 or $300,000. So you might want to consider looking at lower priced homes. Let's say if your budget again is $250,000, maybe you want to be looking at some homes that are listed for $220,000 so that you have some flexibility to be competitive with your offers. Number 7 is to get a roommate. I know this is not a great option for everyone, but if it is something that you can make happen and something that doesn't sound absolutely awful to you, you could consider getting a roommate to offset your monthly payment. Number 8 is refinancing. So you can refinance to a lower rate than what you purchased at. I have an example right here. Both are a $190,000 loan amount. One is at an 8% interest rate and one is at a 5.5% interest rate. So these make a difference of more than $300 in your monthly payment, and refinancing can save you money over the life of the loan as well. My last and final tip for you is to get connected with a knowledgeable and local lender. I have several recommendations who I've worked with in the past, and they are super reliable and trustworthy and transparent. And they will educate you on the entire lending process and the home buying process from a lending standpoint. So, everything that you would need to do to get your credit in good order and to maximize your chance of getting the best interest rate. And then also, there are sometimes first time homebuyer perks or veteran perks. So, definitely getting connected with a knowledgeable and local lender is going to be a really good thing to do early on in the process. And if you don't know where to find one, reach out to your favorite local real estate agent, because I guarantee that they have a list of preferred lenders that they know, like, and trust. And we do not actually get paid for recommending any of these lenders. They are just simply people that we trust and would use ourselves. So you can definitely take our recommendations with a little more weight than, if we were getting paid for them, then maybe you feel like you can't trust it. But you can trust these recommendations. I would use all of my people that I recommend myself. So those are all of my tips for reducing your monthly payment in 2024. And I am excited to update this video in a year or two. And if there are any new things that have come up, any new creative ideas from lowering your monthly payment, then I will be sure to share. So if you found this video useful, I would really appreciate if you would give it a thumbs up, and please subscribe to my channel in order to see more videos like this. Thank you for watching. Bye.